Abhishek, what's up? What happened?
Sir, please don't. Sir, I am selling all the shares of my portfolio.
Not again.
Zero.
Why are you selling all your shares?
Sir, the markets are super risky. You know what happened with my friend? He lost all of his investments last week. I am not going to do that with my money. Sorry.
So you want to avoid risk. If we avoided risk, we would not have built this company. We would not have made that stock market portfolio and we would have got no gains.
Sir, you are a businessman, a founder. You have money. I have no money.
Dude, risk is risk. It doesn't matter whether you're Elon Musk or you are Abhishek. Everyone takes some sort of risk. You heard the story about this guy who said, I will not take any risk. And he shut himself in his house, didn't go to work, didn't go outside because it was too risky, and he stayed at home, and one day a picture fell and he died.
What?
Point is, every decision you take invites some degree of risk. So if that's the case, taking no risk is also some risk. I think one way to think about it is this. You have to take a calculated risk. But no one defined calculated risk for you, right?
What is a calculated risk?
So to answer this, let's begin the episode. What are calculated risk and how you can do it in life and the stock market?
Okay.
So let's start with hedge funds. These guys manage billions and billions of dollars and deploy it in the stock market, in companies, etc. And they have to give a return to their investors.
Correct.
So now you might have a sip of a few thousand rupees, few 10,000 rupees, not lakhs of rupees. But these guys actually invest crores of rupees and tens of thousands of crores. What do they spend most of their time on?
Strategy.
Okay.
Execution.
Okay.
They want to work fast, no? Probably on that front.
Actually, they spend all of their time and effort on risk management. If they understand what are the worst case scenarios that can happen, then they try to mitigate it. Stop loss kahan rakhna chahiye, execution risk of how quickly we can execute an order, how do we make sure that when they place an order, the market doesn't move, they slice the order, etc., etc. It's really complex.
Sir, how will this information benefit me? Tell me.
Let me explain.
Please.
Everyone cares about risk, but the people obsessed about money care about it more. And people like you, who are actually fearful about money, have not quantified the risks about it. If the market crashes today, what's your reaction going to be? This is exactly what should not happen. I know exactly how many times Nifty has fallen. I know what are the worst case scenarios, and I'm prepared for a 50% fall on my portfolio. I'm okay with it.
Oh, you know the future.
I don't know the future. I know it's possible that a 50% fall can happen and I should be all right, which is why all my money is not in equity. There is some in debt. Basically, I have some calculation, some expectation behind if this happens, then I'll do that. But yes, I don't know the future. The problem is you're taking blind risk. And when I take risk, I try to add some logic to it, so perhaps it's calculated risk.
Help me understand.
Let's suppose you're in an aircraft and something happens and the aircraft is going to crash. And you have two options. Option one, you get a parachute. And option number two, you just say, bhai dekhi jayegi, don't have time for this. I'll jump out because I'm scared and maybe a tree will save me. What's the better way to do this?
Hedge funds, airplanes. Sir, obviously one. Now option one, I'll take the parachute, I'll jump.
Correct. So when you jump without a parachute, that is blind risk, which is what you're perhaps doing here. And when you try to jump with a parachute, you're taking some calculated risk. Now, in either case, you could crash and burn. But at least the chances of surviving is a little better when you have a parachute and a plan to deploy it.
So I just took a calculated risk.
So in the context of the stock market, jumping with a parachute probably looks like buying the index fund or buying 30 stocks that you've researched, equally divided, all large cap, thought about the next 10 years, etc. And jumping without a parachute looks like, wow, kya factory lag raha hai, kya logo hai, this is so beautiful, I'll put all my money in this one company.
No, I don't do that.
Jumping without a parachute. Okay, you get the point.
Yeah.
And this is why you see headlines like this. 9 out of 10 traders lose in the market.
Because they didn't take calculated risk.
Yeah, and they don't have a strategy, they don't understand how it works.
Okay, so fair point. I got it. I just have one question. How am I supposed to calculate my risk?
That's
Oh,
simple.
wait. I have a better option. What if I copy your risk idea the way you have calculated
You'll
risk?
copy all my trades
Correct.
in the same proportion.
Copy.
To the point.
To the point. Full stop.
This is a horrible idea. So everyone's risk tolerance is actually different. And you know what you're trying to do over here? You're trying to mask your fear by just saying if something happens, you'll come to me and say, sir, फिर से ये हो गया. It happened with you also. ठीक ही होगा. And you're trying to find a way to not be scared by putting it all on me. Dude, the point is that you become independent. You become independent and you don't need me. But you can't copy anyone because my car EMI versus your car EMI has a huge difference.
I agree.
You've not got married yet, so that expense is yet to happen. So our lives financially and events that are going to happen are different, so our risk profiles are different.
Wait, we've seen Abhishek taking random trades in the office, and that's definitely not calculated risk. So we tried to create Abhishek's risk profile and help him out. Let's say he earns 1 lakh rupees a month. If you've seen our previous videos, you would know that he's into a lot of stuff. So after all his expenses, he's left with 30,000 rupees. Since he's already struggling with his emergency fund, investing all this money might just be an example of a blind risk. So let's just move some of this money to his emergency fund first. Now with the rest of the money, he can try out investing. I think everyone in the office would agree that Abhishek is definitely not ready for trading risk because his investments are not in place, he doesn't have the prior knowledge or experience of the markets. So let's just move to safe investment options. Since he's not a pro at analyzing companies yet, he can go for an index fund or mutual funds. Now Abhishek is a fairly young guy with no dependents and less responsibilities. So he can go for more risk and definitely more equity exposure in his portfolio. If you want to know the portfolio split for your risk personality, you should check out the description for a quick cheat sheet.
So I think there are two types of risk. Let's suppose there is career risk, where you get your salary from, and second is your investment risk. Both of them have one thing in common. You have to spend 10 years building that craft to actually get a great salary because you are very good at a particular skill. I think a lot of people right now switch jobs, which is fine, but switching careers is actually in most cases not good because you want to be really good at one thing and anything less than a decade is not likely to give you the best results. The same thing is true for investing too.
So I have to spend like 5-10 years learning what investing is, will help me understand what is.
And you learn by doing, right? So you learn about an index fund, start your first 1,000 rupees or 500 rupees or whatever.
Okay.
And by doing that, you'll start learning it. Read more, watch more videos, read books, do whatever you can like you do in your job to understand what investing is. And over a 10-year period, you will get returns.
But don't you think that the time that I'm spending to get that calculated risk is too long?
But that's how life is. When you're young, you think 10 years is a long time, but then as you get older, time goes by really fast. So if time is going to go by really fast, why not just spend it in a nice way and a correct way? So for example, in investing, here's what's missing. One, you don't have a personal finance plan, which means your emergency fund, health, life insurance is not set. Second, you do not know what your risk profile is. How much equity, how much debt, how much what. Third, you don't have your goal set. Once you have your goal set, you can split it according to that. Fourth, you don't have an investing strategy in place. Do you put most in large caps? Do you put mid caps? What's your strategy? If you don't want to do that and you don't have time, then you put it in an index fund. So the summary is, skill and money both compound. And compounding needs a superpower, which is?
What?
Time. It's not the mehnat. It's not only your direction. It's mehnat over a long period of time.
Okay, sir, I get it. But what about this generation? We get bored from 10 seconds ke Instagram reels and you are telling me to wait for 10 years. I don't think everyone will get that. No.
Actually, you're right. But all gains come from asymmetric returns. Let me explain. So I don't think most of us will be able to hold on to investments for 10 years.
Correct.
I don't think most of us will be able to stick to a skill, work on it every single weekend, every single week for 10 years. But the ones who do will become the outliers. And I think if you're watching this and you're sitting with me, you want something out of life. So perhaps some people will, which is obsessing over risk and doing your thing for 10 plus years and taking concentrated bets on yourself.
spending time with
and
this.
probably some form of equity, whether ESOPs in a company or equity in the stock market. But you have to do it over a long period of time.
Got it.
The biggest problem in this is compounding works like this. Nothing happening for a long time, then suddenly something happens. And then nothing happens for a long time, then suddenly something happens.
But it's increasing.
It's increasing, but only when you look back 3 to 5 years. When we look at the stock market, we say 12% CAGR. You know what this means? This means year 1 maybe 0%, year 2 maybe plus 5%, year 3 could be plus 20%, year 3 could be minus 5%. Now I don't know what that adds up to, but in 5 years, it'll average 12%. And we are so used to consistently getting something, right?
I understood risk. Now, what about the returns? What will I get?
Let's think about it from an investing point of view. So investing, what you can do is you can reduce risk and increase the chances of a better reward. So let's start with a portfolio.
Okay.
In a portfolio of say 20 companies, it's possible 10% of these companies don't survive. In many cases, there are very large companies which went completely bankrupt. So there was this company called Enron in the US, which was really, really popular. Everyone traded it, and they were revolutionizing energy at that point. Enron went to zero. So is that something you can predict? Absolutely not. Because in this case, the numbers were fudged by this company. So it was a financial fraud. And there's no way you can do this. So the best way is, when you have a diversified portfolio, assume certain number of companies can go to zero. And once you've told yourself this, you will be a little less surprised.
Because I have calculated my risk.
Not calculated, you actually set your expectations.
Oh.
And that changes everything. Charlie Munger said, a happy life, the key is low expectations. The second expectation should be, you know that Nifty has fallen 50% or more in the past in a single run, especially in the 2008 crisis.
So it might fall again.
It will happen. We don't know when. And our job is not to predict, because then fear will overtake us, but we know this will happen at some point. So Abhishek, now you got to go back home and you too, and write in the comments what all you're doing for the next 10 years.
Okay.
On the skill side, on the money side. And I think if you write this down, you'll be more committed. And if you come back 10 years from now, you'll say, wow, tab dekho hum video dekhte the. And this is what I learned.
Nice.
Nice. Also,
Don't forget to subscribe and follow and subscribe. सर मेरे को थोड़ा सा ना धक हो रहा है.
exactly. As a what if?
I copy your risk calculations. BTS आ गया सर, BTS आ गया.
मुझे लगा क्या बोलने वाला है ये? एसी ऑन है ना? गर्मी लग रही है बहुत.
Red will give you wings. Cut है?